Okay, let's get right into it. We are in the middle of a massive strategic recalibration. This explainer is built around a critical update from March 24th, 2026, and it's designed to give you the clarity you need to navigate a world that has, well, it's fundamentally changed in just the last 72 hours. 72 hours. That's all it took. In just 3 days, the core assumptions that have guided global strategy and, frankly, where we all put our capital haven't just been challenged, they've been completely fractured. So let's be blunt. The world you were analyzing just last week, it's gone. In the next few minutes, we're going to cut through all the noise to give you the actionable intelligence you need to operate in this incredibly volatile new environment. Right, let's start with the most important shift of all. Your base case is now totally obsolete. What was once a low probability, tail risk event is now the central scenario you absolutely have to plan for. And just look at the speed of change here. I mean, it is staggering. On March 20th, our base case was a prolonged but, contained conflict. But by the 23rd, the probability of a full-blown regional war, we're talking the closure of the critical Strait of Hormuz, more than doubled. This is a seismic pivot, and it is now your new base case. So, how in the world did we get here so fast? Well, it wasn't one thing. It was a cascade of 5 shocks that basically rewrote the entire map. This sequence of events just created a complete strategic rupture. It all started on Friday when Iraq declared force majeure. That's basically them saying they can't fulfill their oil contracts, which slashed production. By Saturday, that escalated to a direct U.S. ultimatum to Iran. And then by Sunday, we were facing a nuclear-adjacent crisis. Each event just amplified the last, and it pushed us way past a critical threshold. In this number right here, this illustrates the long-term impact that is now locked in. An attack on Qatar's main facility has taken 17% of the entire global supply of liquefied natural gas, or LNG, completely offline. And look, this is not a temporary hiccup. Sources are confirming that capacity is just gone for up to 5 years. So, this brings us to one of the most confusing signals we're seeing in the market. The price of gold is collapsing during a massive geopolitical crisis. The old safe haven playbook, it has completely failed. In a classic crisis, capital floods into gold. That's what's supposed to happen. But what's happening today is totally new. The oil shock is so severe that the overwhelming fear isn't just about conflict, it's about inflation. And that fear is forcing the market to bet on a stronger US dollar. And the data proves it out. I mean, just last week, markets were thinking about potential interest rate cuts. Today, they're pricing in a 52% probability of a Federal Reserve rate hike by October. This is a stunning reversal, and it's driven entirely by inflation fears coming from this energy shock. And the consequence for gold was immediate. The main gold ETF, the big fund that tracks the price of gold, saw a record-breaking outflow of $4.2 billion in a single week. Investors were actively dumping gold to find safety in the US dollar, which is now seen as the only real haven in this kind of inflationary shock.
So the big question is, what do you do right now? Because your old playbook is obsolete. You need a new one, specifically for this crisis.
First things first, you have to adopt what's called a binary event protocol. This is just a framework for high-stakes moments just like this one, where a single event, like the outcome of this ultimatum, is going to lead to one of 2 radically different futures. It forces you to plan for both extremes. And this 3-step process, look, it's not a suggestion. It's a mandatory protocol to protect your capital. Step 1, pause. Suspend all new M&A, all major capital commitments. Step 2, monitor. You wait for the resolution of the US-Iran ultimatum. And step 3, activate. Immediately apply a severe stagflation stress test. That means high inflation with low economic growth across your entire portfolio. This is no longer some theoretical exercise. It is your new valuation baseline. This new reality means your M&A playbook needs an immediate and, frankly, a ruthless update. Any deals that rely on Gulf supply chains are now incredibly vulnerable. Same goes for expanding into Asian markets that are getting slammed by the LNG shock. But this crisis also creates some structural opportunities. The case for buying assets in renewable energy and grid storage has never, ever been stronger. Now, when it comes to the most severe risk, actual nuclear escalation, the playbook is crystal clear. This is a boundary condition. If Israel strikes Iranian nuclear facilities, your financial models become totally irrelevant. The only smart move is to pause, monitor, and wait. This brings us to the immediate horizon. All of this risk, Everything we've talked about now hinges on a single, time-bounded variable. On March 23rd, the U.S. administration put planned military action on hold for 5 days, citing productive talks. This has opened a very fragile diplomatic window, which is set to slam shut around March 28. The entire global risk landscape, and by extension, your strategic planning for the next quarter, now comes down to the outcome of these next 120 hours. Are we looking at a diplomatic off-ramp that pulls us back from the brink? Or is this the countdown to a catastrophic escalation?
And that right there, that is your key takeaway. The challenge isn't just about surviving this crisis. The real competitive advantage will go to those who can hold both the immediate threat and the new structural opportunity in a single frame of mind. That dual focus is what's going to define leadership in this new era.